Hello everyone. It is Sunday, May 23rd, 2021, and this is episode 14 of Odds Are, your S&P 500 weekly market forecast. Let's jump right in, because I'm particularly proud of this last one. In last week's episode, we talked about how the breach points had actually flipped with the expected settlement range, and now they were outside of the expected settlement range, right? So in order for us to breach them, we would have to go outside of the range, and in order for the forecast of the expected settlement range to be correct, the market would then have to come back inside of that range. And my forecast was that we were going to breach the lower breach point and then rebound back up to end up within the expected settlement range. And that's exactly what happened. Let's take a look at the graphic here. You'll see last week's relative view. You can see that the lower breach point was set at 40.57 and the lower settlement range was 40.59. Well, the market made it just barely, but it did. It went down and breached to 40.55.5, so just 1.5 points below that breach point, and then it bounced back up and wound up right around that the red line, which is the center line of the Bollinger Band. And that's kind of where we've been reverting back to the last 2 weeks. We've been kind of hugging that line, a couple of fake breakouts to the downside, and then back up to that neutral territory, which is why we'll take a look now at our next slide, and you'll see that we are back to neutral. On the short-term moving averages, we've flipped a couple times now from bullish to neutral to bearish, then back to neutral, and I mean, there's obviously something going on at the short term, which has not really been flushed out yet. And on the medium term and long term, we're still staying bullish because overall, we're still very, very high, relatively speaking. But this neutral signal to me is just telling me, all right, the market is done with its supersonic mode. And now we are entering a situation where we may be going parabolic. But a little more about that later. Before we get to that, let's go through the numbers and look at next week's breach points. So on the low side, you've got 40.80, and on the top side, you've got 42.09 with over 81% odds that we will breach one of those 2 points. I'm going to change the order a little bit. I'm actually going to put in the settlement range first. And you see that the settlement range is now back outside of the breach points. So you've got a 40.42 on the downside and 42.29 on the top side, with a 79% chance that we will stay within that expected settlement range. And then I will add in the 40.13 parabolic SAR level, which again, if we were to close below that level next week, would be a very, very bearish indicator. And it is now, just creeping up more and more. Again, it's a parabolic, so it's going to go up every week a little bit more with more magnitude. And so we are now getting to the point where I don't think it's very likely, but it's beginning to be within the realm of normal probability that we can breach this point and stay below it. So there is definitely a chance that we can close below that 40.13 mark. We've been close before in the last 2 weeks. All right, let's wrap all these up together into next week's relative view. And you can see the blue line where we closed. So a little closer to the top side, but not by much. And then you see that parabolic SAR now getting closer to that lower settlement range. So again, for it to close below the parabolic SAR, we would have to be outside of the expected settlement range. When I would really start worrying is when that parabolic SAR level is above the expected settlement range, because then you have high probabilities of both things happening, and it becomes more of a concern. It becomes more like this is definitely possible, and we've got to start taking precautionary measures. All right, and now we will take a look at what we didn't see coming. And for this week, we're taking a look at the supersonic nature of this market recently. In the last, really year, the market's just been on a tear upwards. It's been in supersonic mode. And we've been talking about how that parabolic SAR level is going up and up and up. And so what happens if we do close below that? Okay, we close below a parabolic SAR. So does that mean we enter into a parabolic market? And what I mean by that is, well, rather than explain to you, let me show you. Let's pull up this graphic here. All right, so you can see that since the big drop after the COVID scare, well, not scare, the beginning of the COVID woes, as I call them, in March, we bounced back up in almost a straight line. It's been supersonic since then. And I've talked about this in a previous episode where we talked about the pyramids in the sky and these like forming triangles that keep, showing a pattern in the market. But if we look at it now with the parabolic SAR, if we were to breach down, could we go down with the same strength that we've been going up? And so that symmetry, that other side of the parabola, where we would be going down in that arc form the same way we've been going up with the same kind of like exponential growth, but now it would be exponential drop. And I'm looking at this and it doesn't seem so far outside of the range of possibility, because we've seen drops of that magnitude before, especially relative to the growth that preceded it. And so when we're looking at this market, the combination of all the factors that are going into it, we could stay up here for a while, hang out, but my bet is we're going to be seeing at least something resembling a parabolic correction going back to the downside. And you have to be patient. You gotta make sure that you're not putting all your eggs in one basket. And that is why for this week I have brought back our good friend Mr. Buffett for the quote of the week. And so, of course, everybody knows Warren Buffett, and one of his many quotes is, "The stock market is a device for transferring money from the impatient to the patient." Now, many people, knowing him to be a value investor and knowing that he bets on these companies that have great products and great fundamentals and balance sheets, you'd probably think that he's saying all you have to do is wait and the market will go up. But notice, it's not transferring money from bulls to bears or bears to bulls. It's just transferring money from the impatient to the patient. And so whatever your stance is on this market, whether you believe that we are now just going to kind of stay within a range, whether you believe we're just taking a break before our next supersonic leg upward, or whether you believe it's going to go down in a parabolic fashion, patience is key. Because when you start rushing your positions, when you start rushing your decisions, and when you start rushing your analysis, that's when all the mistakes come in. And that's when you'll find yourself transferring your money to those who are more patient. So on that note, I wish you guys a great week. Have fun, and above all, stay patient.